HGX.X called Philadelphia Housing Sector. These are the names. KB Homes is in here. Lennar is in here. All of your home builders that were part of the major financial crisis has come back to rally. And when we take a look at where the top was back in 2007 and these major lows that have been in play, is we are going to tell you a little bit about the housing stocks, and we're going to cover some of them individually. The problem, in my view, is that these things, some of these names have already ran 120 to 150% in some of these individual names off of their calendar, multi-yearly lows. So a lot of this move has been bought way in anticipation that there would eventually be a turnaround in the housing complex. And what I'm going to do is talk a little bit about this weekly chart. This has to provide a bull move. With Ben Bernanke doing the QE3 and buying back $40 billion a month in a mortgage-backed security, these things have rallied in anticipation that QE3 from the bottom of this index from 120 up to 167, which is a major wall. It took out this major wall of resistance here. And the point that we're going to make, and we're going to make it very clear, is that yes, if the economy was to get better and with QE3 in play, you would want to look at buying some of the pullbacks in some of the housing names. And I'm just going to go to some of the ones that we trade the most of. KB Homes, we're going to take a look and see where KB is off of the weekly chart. And I'm going to feature quite a few of them instead of doing them individually. And the thing you have to do in this particular sector, that we have finally gotten to KB Homes where it has a weekly buy signal. It is a player in this area, and the thing that we would just like to caution people is it's going to take the housing sector to continue the bull moving forward. And Ben Bernanke is right there. Here's a major resistance level where they made the highs. Here's a major low on KB Homes. But these things have ran a percent level and accumulated. You got to buy the pullback in this area. So there's KB Homes. Let's go to another one that we love. Let's go to one that let's go to the CTX. Quest Corp. It's in the sector. And it's rallied up. And it's rallied wonderful. CTX. It's right up here. It's above the 10-week. But some of these names have come off of their lows. Another one that we like is this Lennar trade. Lennar has really ran up off of the bottom anticipation in 2011. And we're going to hit this major wall of resistance. And we just want to cautionary people that, yes, the housing sector's performed well. And it's ran anticipation, Lennar. So what we do is we'll look, depending on fundamentally, you can see right here in this weekly chart how Lennar has performed in calendar 2012. And you went from the $20 breakout handle up to $37.48. That's a $17 move over several weeks. A lot of fund managers and mutual fund managers and people that try to benchmark and beat the S&P, they never were really buying the home build. It was too hard to believe. But now that you got QE3, Lennar is to be one to buy on pullbacks in this phase. And you can see here that it's got a longer term bull, Lennar being the one that we like as number one. Another one that we like in here, and we'll take a look and see how it's performed, is this MDC Holdings. It's come straight up off of these bottoms in 2012. But remember, these things are overbought. They've already ran in anticipation. You got to look for the pullbacks and the earnings to go with these names. And how that QE3 will play in the sector. Remember, it was the housing sector, and it's early on. There's still lots of things. Let's take a look at another bellwether that we've always traded, and this is the Ryland Corp. And you can see here where this thing was up here in 2005. Boy, at $80, they had the major wreck in 2007, and we shorted them all the way down. But we're going to tell people that they're back in favor. and that buying the dips, and you got QE3 behind you. It's going, see, this was a great buy. It went from $10 to 33. And not only that, on this bellwether here, it's overbought, Ryland, and you have to be careful because you're going to have to wait for pullbacks to be able to buy this housing sector moving forward into 2000, this calendar year 2012, and forward looking into 2013. So we covered Ryland, we covered Lennar, we covered KB Homes, and we'll go take a look at this one here, which is called DR Horton. And just remember that these home builders were bought well in advance. They have lagged the broader market. They've been in a terrible bear for several years, and they've got QE3. They're overbought on the weekly. You can see a number of weeks of how these things have come back to life. So there's the DR Horton. Another one that we like, and all of these have got different fundamentals, but here's that Ryland group. And you can see right here off of these bottoms on the weekly exactly where we have rallied right up. This was a great performer at $10 as well. They got real cheap. They rallied on up, and they continue to rally for 2012 to continue to provide the broader bull run. They're going to all have to do well, but we're going to tell people, listen, we had lots of buys long times ago using those options up and out of the money, but these things are overbought, so you got to be careful about what the media tells you. You just need to know that they're back in favor, and they've ran up to the highs, and they've got bull trends from bear trends, and they're starting to get back into the bull mode in this sector. So another one that we will show you that has not done that well, let's take a look at VMC, Vulcan. Here, this one has not done. It's in the housing sector. It's part of it, and it had the first weekly breakout, and we're going to be looking at this thing. It was a good buy down here, and they can make some good moves over a period of time. It's not something that's an intraday trade now, so let's keep that. Oh, good old here's one that has not recovered yet. And we get back down to this one here. It's come off of the bottoms, and it got cheap down here, and it got cheap at $1.50, and that's this HOV. Used to be one of the bigger bellwethers. It, was all the way up here at $70, and this is what happened to that housing market and the financial crisis. So with QE3, this one here does have a chance. We'll have to go into the fundamental side of things and see if this thing will pull back to the $2.50 range. And longer term, where would be the turnaround in this HOV? It was down here at $1.50. It's only ran a ways. It's not a tier 1 level. It's a tier 3 level. And the one that I would really recommend that we take a look at, MMTs, is how this Toll Brothers, which is, the Toll Brothers was always one of the darlings up here. And it got extremely cheap, and you can see the complete breakout from our 2011 lows, but most importantly is a calendar 2012. And we're right up here, and we're overbought in these names. They have provided this bull, and it would be the financials, it'd have to be the home builders that have been beaten down, and it takes these sectors that was clear down here. This was a great buy on that Toll Brothers right here. I mean, this thing could have been bought down here right around the $15 area. There's a $20 move. That was at the bottom of the lows. $20 up to 36 is about a $16 move. They're overbought, and they're going to be hitting a wall of resistance. But we will be forward-looking, looking at that housing data, that Case-Shiller index data. I can tell you that we did have Case-Shiller for July come out plus 1.2%. The prior was only 0.1 or 0.5%. So the Case-Shiller itself has been moving higher across various different regions. I'm not going to go into that. So this is the Case-Shiller, which was out today, and the numbers came in good as anticipated. So one of the new home sales are going to be released tomorrow. Okay. So we'll be taking a look at that new home sales, and once again, the housing sector is overbought, but we just want to update these names because we want you to know that some of these names have ran over 100% off of their bottoms, 150%. So you want to be careful you're not buying the highs in these, but you want to be able to go in here. You want to pick off the best ones that are in here, and we already know what they are. And we'll be looking at these forward looking for the next 12 months. Should the economic data improve, should the Fed be behind this whole thing here, does it mean that people are working and going out just buying homes every which way? Not like we would like to see, but it doesn't matter. The bull is here, and the bull is in this name. And the bull is in the broader indexes. And be cautionary that you want to wait for pullbacks. You do not want to be buying at the high, because they've already ran in anticipation that in the mix of all of the austerity and the fiscal cliff going over, what they've done is they got the FOMC, Ben Bernanke, behind this whole area, and it's changed. And it's going to be quite interesting as we pull back in the index and how the index performs and how the broader leadership names in here perform on their pullbacks. So they don't move a lot, but it is part of the broader market that these things have lagged for a number of years, right along with the financials. And these two sectors is also helping out these broader indexes over here. The S&P, you got the Dow, some of them, you got some of them that are in those areas. But nonetheless, we are given a major calendar year update. It's a major one. We put in there some of the stocks for the MMTs. So when you go back and take a look at the video, we'll take a look at the individual names like Ryland. When Ryland wants to pull back, we'll take a look at the fundamentals. We'll take a look at where the price volatility reversals come in, where the support levels come in, where the fundamentals play a role, what QE3 will do moving forward. It will be forward looking for a number of months now that these things have got, a backstop behind them. And if we do get economic recovery, these pullbacks are going to be viable. And you want to see the home builders doing well. It's a lot of short interest has been taken out of these things. A lot of people were short for a number of years, and they got down here to ridiculous prices where we were buying them cheap. At $10, you couldn't help but buy them. And yeah, it takes a long time to move this sector, but it's back in play, and they got some bull setups in this sector. So once again, MMT, individually, we're going to go after the best because we cover every sector. And we pull out the best in each one of these, and there's two names in here that are going to do extremely well, and we'll talk about that later. I'm concluding a major calendar year update on 9/25 of 2012 of the housing complex and how that has turned around and provided this new bull rally that we have, and how that bull rally has been needing these home builders for a number of years. And if the home builders and we get our housing in control, that's what we want as a U.S. society. Hopefully we get the right president and we get the right people getting back to work where people can go out and just start buying up all of these foreclosures and homes, and people start building more. And we're going to have to do the fundamentals on each one of them. It's been a bright spot. It's been a bright spot. Once again, they're all overbought. They've ran 100% off of the bottoms. You have to wait for pullbacks. Don't try to go in here and be a hero up at the highs after multi-weeks of breakouts, weekly breakouts, making those highs and consolidating on the weekly. You have to be into these things like we are way ahead of time. Way ahead of time. So that you've got the trade management. These are overnight type of positions that were out of favor. They were beaten down. This is the place to be. We will be selling into them for profit taking because they're reaching major walls of resistance and they're short-term overbought, and they had a great move. And some of the bigger money bought over time and been holding over time for this Mr. Ben Bernanke, buying back $40 billion a month of mortgage-backed securities is definitely going to help. But they're going to have to get out there, build. We have the cheapest money ever in the United States with low interest rates. And if you got low interest rates, it's time to start building homes. Not only that, With the very lowest interest rates, it's time to start building out infrastructure, and how infrastructure forward looking in 2013 would play the same kind of role that this housing index is. And that is right now, money is at its cheapest level ever in this housing sector. And people that can buy are buying. Now they got to get out there and build more. I'm concluding, and excuse me for getting excited. I got Google here in the background up $13 again today. We'll cover that next. But that's the housing sector, MMTs. We'll be doing lots of work for a number of years around these names and around what the consumer is doing and many other things that go in play.